I'm at the Super Return Conference here in Berlin. It's the biggest private equity conference in the world, and they've gathered here this week to discuss two problems. Those with money need to figure out how to spend it this year, and those without need to figure out where to get it, and fast. Now, I'm joined by Jon Moulton now, who is the founder of Better Capital, and he might be able to tell us where we can get this money.
Right, well, the fundraising's really slowed down. There's about sort of $1 trillion, give or take, in the funds at the moment. And in the last quarter of last year, there was 30-something billion raised. So clearly, raising money is very difficult, and actually getting rid of it's pretty hard. There's going to be a lot of deals in the near future as people who are looking at funds that expire, that means they can't spend their money, have to spend it in the next few months or couple of years. There'll be a lot of very aggressive deals done shortly.
So is that private equity's way of contributing to the recovery to help stimulate the M&A market? Is that your expectation?
I don't think that's the motivation, but it will be the practical effect.
And what about the IPO market, the listings market? Will it be a fairly mixed bag, or do you expect things to be more on the deal front or on the listings front?
The listings are really badly needed. There's a lot of firms that need exits, and the IPO market may be the only one open. The IPO market does look a bit ropey today after the last few days of dodgy markets, concerns over the sovereign debt and the rest of it. I don't think anybody can be very sure that market will be open.
Well, and a few deals that have ended up going to a single buyer at the last moment. What will it take then to encourage appetite for investors to feel confident that they can buy into these new offerings, these new listings?
I think they will need to have comfort about the global economic scenarios, the UK debt, the French debt, the Spanish debt, the Greek debt, the US. Nobody really knows. So until there's comfort in the economic scenario, IPOs will not be easy.
Can you see a difference between the European zone and the US zone in terms of your industry, private equity, and the level of confidence and the drive to get deals done within the first half?
Well, the US has a much stronger domestic economy than most of the Europeans, so people can feel more optimistic there, and they are. Things happen quicker, the restructurings happen quicker, the expansion deals take place. Venture capital is a real business in the US, it's not in Europe anymore.
Now, private equity was one of the first financial groups to be vilified by perhaps the press back when the collapse set in. It moved on to investment bankers and then eventually politicians. Do you think that vilification was justified, and do you see a way for private equity to contribute to the recovery in other ways, perhaps with less rigorous financial management plans that gave them a reputation for loading only debt and not encouraging better management?
Private equity is being forced by the absence of leverage to actually manage its companies better. There's a lot of capital sitting in private equity that can be used to help drive the economy forward productively. We really must all hope that that's exactly what happens. It'll be good for private equity, it'll be good for the economies. Can
you bring strategic, other corporate firms to the table? Private equity can't sell to private equity. They need to sell to some people in companies in the sectors themselves. Do you envision a wider discussion there? No, I'm afraid they'll probably mostly sell to each other. That pressure of money and the need for exits will coincide. I think a very large level of secondary buyouts will be taking place. Thank you so much for your time. That's it for me, Francine.